Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com. And in this video, I want to show you how you can take advantage of the seemingly difficult price action that we see here in the S&P 500 on this weekly chart, and show you how what we're seeing now really isn't that different than what we've seen in the past. So to illustrate that, let me just go back to 2010 quickly and just draw the range of the year, high and low, really rough. And then here's where we started, here's where we ended up. Pretty, tough year, right? Very choppy. If I do the same thing for 2011, here's basically the range. And here's where we started, and here's where we ended up. Tough year again, right? Consolidated, dropped, consolidated, came right back to where we started. Now let's take a look at 2012. And if I do the range again of 2012, there's roughly the high, there's roughly the low. Now in this case, we actually started near the low and ended at the high, but in doing so, we came all the way back to the low near the middle of the year. So it was by no means just a buy and no problem market, right? And then 2013 and 2014, all good, right? Party till until the market sells off. Really strong. So in that environment, really easy. But then what happens in 2015? I'm sure this is all still very much in our memories. 2015, rather rough year, right? It starts here, pretty much goes nowhere, collapses, and then comes all the way back up to have a pretty tough year. Now, 2016 could be more of the same. So what we want to do, and what the pros have done for years, is focus on sectors. So let me show you how you can use sectors to be able to do really well in these periods that are choppy or not easily trending. And then when we get a trending market, sectors absolutely explode. It's even easier than stocks in an environment like that. So before I get started, I want to make sure that if you're just finding me on YouTube here, that you subscribe, and also that you can find more videos like this at marketgauge.com/tutorials, as well as more trading insight and trading ideas if you follow us on Twitter at MarketGauge or at MarketMinute. If you're finding this on Facebook, please like it so that you can get access to more information like this as well. And finally, make sure you're watching this in HD. Lower right-hand corner, you can click on the settings button and make sure you're in HD. Great. So in these different time frames, the market's going to go up and down and do what it's going to do. And rather get rattled by the overall market, you can use those ups and downs to shift into industry groups that, much like the overall market, when they get going, have really good trends, and you have less exposure to earnings reports. So the way I can give you an idea of how this works is I'm going to take the SPYs here, and this is a weekly chart, and let's just take a look at how some of the industry groups have performed this year. And I'm going to keep a weekly chart over here on the right, just for some perspective. All right, and I have the daily chart over here on the left. And here's the essence of what you want to do when you look at industry groups or sectors. This is a way that professionals have looked at the markets to understand how strong the markets are, whether or not they should be generally long or generally defensive or even short, and also to identify the right place to be to take a position to be long or short. Now, actually, before I get into the specifics of the industry group, there's a really interesting and powerful chart that we keep up on our website. Let me pull that up for a second. Okay, so I just went to our website and went to the resources area, went to Little Big View, click on market sector summary. You can also get here by going to marketgauge.com/sectors. And this is a brief list of the major sector ETFs. And the idea behind this page is to keep you on top of the major industry group or sector rotation. It's sorted by the stocks that are the strongest over the 6 months. I won't go into all the details over the importance of a 6-month time frame, but it is important. And the other thing that this page has on it is a chart that aggregates these sectors in terms of which are up, how many are up or down based on the 6-month percent change. And so this is, again, a weekly chart here. This line here is a 40-week moving average, which is the equivalent of a 200-day moving average. And the idea behind this chart is to let you know whether or not you've got good industry group breadth or sector breadth as the market is trending or not trending. And if you are above the 200-day or 40-week moving average, you really want to see your number of sectors that are positive be over this yellow line, and the further over the better. And so we could see in 2015, as the market was going sideways, the sectors were really beginning to deteriorate, and really should not have been a big surprise when the market broke down hard, because the underpinnings of it really weren't that good in terms of the sectors. And then when the market rallied, you can see that the sectors really didn't get back into gear. And so again, not too surprising that the market sold off again. Now the interesting thing right here, and I'm not here to call a big bull market move from here, but we can see that sectors, this is telling you there are a lot of interesting and strong sectors out there that are worth following. The big picture, and the other reason to focus on sectors right now, in my opinion, is that for the last, let's see, what did I say earlier? Almost 18 months, and I guess I could almost say now 2 years, if we look at this line, I'll just draw like major support levels. Market has been within this range. Granted, the initial part of this was up, but for at least well over a year, the market has traded within this range. Now, this is a tangential note to this whole video's topic, but this is a lot of consolidation, and if the market were to break out to the upside later this year, this would represent a really nice consolidation for a nice move higher. Now, I'm not saying that that's going to happen in the next couple months, but this is definitely something you want to be watching. And as it pertains to this particular video, the sectors that are leading that move are sectors that you are going to want to be a part of. Because if we get a move like we got in previous years and trending years, those sectors could be the ones that really explode to the upside. But the point of this video is that even if we just are range bound for the next year, for even longer, there's a lot of great moves in the sectors. We've already seen it this year, and that's what I want to show you. But keep an eye on this page on our website, and you'll have a really good insight into the strength of the overall market. Again, that's sectors, under resources, and little big view. So let's pull this away and get back to some of the examples of how sectors have been really powerful vehicles to be in this year. So here is a chart of XLU, and below I have our price leadership line from Triple Play. You don't need the price leadership line to do this, but it is a really quick and easy way to illustrate whether or not a symbol is leading the market or lagging it. And the way that we read this is that if the blue line, which I'll go over in blue, if the blue line is over the red line, it is an index or a sector or a stock that is leading the market, and it's bullish. It's basically a bullish indication. So as the overall market, as you'll recall in January, was in the basement, XLU was consolidating. Right at the green line is the 200-day moving average, the dark blue line is the 50-day moving average, and the magenta line is the 10-day moving average. All right, so even if you use basic phase changes basic technical analysis to follow sectors, and you identify the ones that have patterns like this. In other words, the market is selling off, this is consolidating, and when it breaks out of that consolidation, this has had an amazing run all year long. So while the market has had this big seesaw effect, and the market is basically flat for the year, maybe up 1%, 2%. If we look at the SPYs, this thing has had an amazing trending year. There's always going to be, almost always going to be, a sector that is having a good trending year or a good trending period. Another one that has had an amazing year so far is GDX. Now, initially, this is the gold miners. Initially, it sold off, but after forming a really strong base here and doing a head fake at the bottom, again, you can see that it starts to outperform on this way back up. Again, this breakout from a base has led to an amazing move to the upside. Again, almost doesn't matter what the general market is doing. Now, I won't say that it doesn't matter completely, because if the whole market is falling apart, oftentimes sectors will all follow the market. However, as you just saw in the previous chart, there are times when, and it's happening now, when sectors begin to build momentum, even though the overall market may still be in a range. Now, a slightly different example, but a powerful insight into which way the markets are going to go, is IYT. And you want to pay attention to this one right now for this reason. So when the market sold off in January, IYT got hit pretty hard. Now, if you remember, the market rallied after that and then came back down. IYT did not. IYT stayed strong. This was an indication that maybe the market's low was in fact going to be a head fake low, which it turned out to be. And IYT, had you been focused on it, was the first one to move higher. And again, a break above the 50-day moving average here has led to a really nice run. Again, this highlights the fact that it was leading right from the bottom, and a move higher continued. So again, a nice, and I would say an easier way to anticipate a bullish run than trying to pick a bottom in the overall market. Now, you're able to do that when you focus on sectors. Now, the reason I'm saying you should focus on this one right now is, remember, this is the 200-day moving average. So IYT, being the one that led the markets to the upside, is now starting to turn negative. 200-day moving average is a critical level. If this continues to break down after stalling at I will say an obvious point, all right, so this would be a really obvious point for IYT to have some trouble, 145 to 150. If it starts to roll over here, that could mean that the general market is also about ready to either roll over or pause for a while. It's had a nice run since the lows. All right, so keep an eye on IYT for that reason. Now, IYT kind of took us up. Gold, as I just pointed out, took us up. XLU took us up. So the other thing that's really powerful about industry groups is you get this rotation. So what might the market rotate into next? Well, take a look at IBB. All right, this is the biotech index. So IBB really hasn't participated in the rally, but it has based out really nicely. Now, there could be a number of different reasons why IBB didn't participate, but more importantly, if you're watching the technical action on the charts, whatever those reasons are that have held it back, if those reasons become less of a negative, which time heals almost everything, and this base breaks out, we could find a situation where the market starts to rotate into what hasn't moved up, which would be an IBB. Another chart that looks very similar, a little more conservative, but has some of the similar stocks in it, XLV. All right, so here's one that really hasn't moved up all that much, but if this were to have a strong breakout, which it's already started, and just rally back up to the 73 level, that would be a nice move in what could otherwise be a range-bound market. Now, I'm not suggesting we buy it right here, but keep an eye on pull back, maybe back to its 50-day moving average, and know that the IBB and XLV are two areas of the market that have been basing. And just like gold based out, just like XLU based out, these are common patterns. If that base proves to be the bottom that the market turns up from, this is an area to be focused on, regardless of whether or not the markets continue to move higher or move sideways. Another interesting pattern out there is IYZ. Right? So IYZ is US Telecom. Now, I have the weekly here so I can illustrate the bigger picture. So the market is nowhere near its 2015 highs, the SPYs, right? If I pull up the SPYs here for you, let's just do a quick comparison, right? We talked about earlier in the video the SPYs. They're not near their 2015 high, right? I don't know if we're going to see a breakout of the 2015 high, but one of the things you should be watching for as the market moves up to the upside is the industry group or groups that are already breaking out to the upside, as well as we saw with the IYTs, the ones that may be rolling over to indicate that the market might roll over. Again, even if the market just consolidates in this range, there are going to be industry groups that have huge moves. And again, you don't have to be as focused on picking individual stocks. So that brings us back to IYZ. So IYZ, the key level in IYZ, or one of the key levels, is this 31 level right here, which it's broken. The next level in that high of 2015 is just below 32. So if IYZ continues its trend higher, this is one that I think you're going to want to keep an eye on for a candidate that can continue to move higher. And I'm not suggesting you have to buy the new high. You can buy the dips as it continues to trend higher, assuming that it does. All right, now another index that you may not have been focused on but looks incredibly interesting is XLK, all right, the technology ETF. So even the Qs are not near, let's take a look at the Qs just to put some perspective. Even the Qs are not near that 2015 high, but XLK, just a different group of technology stocks, is. So if the markets continue on their bull trend, if XLK continues to break out to the upside, you are going to want to pay attention to this. In fact, even if it pulls back, if the market pulls back, these strong groups are the ones you want to look at for a pullback to buy. And a good example of that, and this is one that you've heard me talk about for months now, if you've been listening to these videos, is XLP, right? So XLP, when the market was selling off in January, before the market sold off in December, I kept highlighting the fact that this thing was trying to break out. And then when the market bottomed, this was sitting right on a support level and pulled back. Now again, this black line is the 50-week. The magenta line here is a 10-week. So this is equivalent to a 50-day moving average. Pull back to that. But look, this was a really easy breakout. Now it doesn't look like a huge breakout because this is a weekly chart. This is not a very volatile stock. So if we go look at a daily chart, you'll see that this breakout this year to the upside, which happened around 51. Average range on this is only about 50 cents. So this 2-point move is actually 4 times your average range. It's a nice move, low volatile stock, and in an uncertain market, this has been a really reliable trend. So you're going to find trends like this when you just focus on them. All you have to do is focus on industry groups, look for the ones that are leading, and then have the right patterns to use to either focus on breakouts or focus on buying against support, focus on buying the right groups when the market pulls back so that you can take advantage of even the smallest rallies in the market, even if the market is stuck in a range for years. I hope it doesn't happen, but if it does, industry groups will keep you in the right place. And better yet, if you're focused on industry groups, when the market actually does break out, then it's a gold mine. Hope that helps, and I'll see you in the next video.